Outstanding achievements by India's top financial institutions. This special evening, we would like to extend our gratitude to our partners, presenting partner IRB Infrastructure Developers, co-presenting partners eMudra and Gujarat Mineral Development Corporation, corporate partner Radico, associate partners Runwal Developers and Ward Wizard Innovations and Mobility, knowledge partner Ernst & Young Global. Ladies and gentlemen, a round of applause for our partners. Today's event is live on financialexpress.com and on the social media handles of Financial Express. Now, you can post about the ceremony with the hashtag FEBestBanks, and I hope you do. So, as we move forward, having said all of that, let's have a glimpse into what this evening is all about.
Established in 1961, the Financial Express offers rich analysis of economic and corporate developments. The FE India's Best Banks Awards, launched in 1997, are aimed at rewarding the best performers in India's financial sector. Over the years, more categories of players have been included, reflecting the diversity of the country's financial ecosystem. From banks, NBFCs, to small finance banks and fintechs, the universe is now more inclusive. The methodology adopted for the process of selecting the winners is rigorous and is primarily based on extensive data provided by knowledge partner Ernst & Young using data from the Reserve Bank of India. However, the last word comes from the independent and high-powered jury, which considers both financial and other criteria. The FE India's Best Banks Awards ceremony, while celebrating the best in the Indian financial sector, is a meeting place for the industry's best minds, a platform where key issues are deliberated upon.
May I please request Mr. Shamal Majumdar, Editor, Financial Express, to kindly join us on stage for the welcome address. Ladies and gentlemen, Mr. Majumdar.
Hon'ble Union Minister of State for Electronics and IT, Skill Development and Entrepreneurship, Shri Rajeev Chandrasekhar, NaBFID and Geofinancial Services Chairman K.V. Kamath, distinguished guests, ladies and gentlemen. Good evening and thanks for being here to applaud and celebrate the finest in our financial sector, our best banks, SFBs, NBFCs, fintech players, and the men and women behind their great institutions. The winners are not only about excellence in their respective organizations, they are also powerful change agents in the communities they serve. It's an absolute honor and privilege to have Mr. Chandrasekhar with us, and we are indeed grateful to him for taking time off from his busy schedule to be with us here today. While in the initial years, the FE Best Banks Awards were restricted to banks alone, over the years, other intermediaries such as NBFCs, SFBs, and then fintechs were included. There are also awards for legacy players who have become digitally savvy. The FE Best Banks Awards is the coveted one simply because each of the award winner has been selected by a distinguished 6-member external jury led by Mr. S. Ramadura, who is with us here today. All of the jury members, as you know, are highly respected and credible names. Our deepest gratitude to each one of them. And a big congratulations to all the award winners. Let's give them a big hand, please. As the stories behind today's awardees would show, India's financial institutions are eager to grow, scale, and achieve new highs, and quite a few of them have been taking bold and transformative action to position themselves in the global financial architecture that digitization will unleash. One of the highlights of today's event is a fireside chat with a man whom corporate India and the financial sector loves to listen to. For his formidable reputation as the trailblazer and the one who first saw the power of technology to disrupt the financial sector. At a time when there was hardly 100 odd ATMs in the entire country, he set a target of setting 1,000 ATMs within a year. Now, that was unthinkable at that point of time, but his bank did it. He's also a man who played a huge role in the growth of retail credit in India and has shepherded the Indian financial sector for a very long time, first as ICICI Bank MD and CEO, then chairman, before he moved on to Infosys as chairman. He also led the BRICS Bank and is now the chairman of NaBFID and Geo Financial Services. Above all, he is known as a long-term India bull. Ladies and gentlemen, you must have guessed whom I am talking about. I would now request Mr. K.V. Kamath to join me on stage for a fireside chat. A big hand to him, please. So, Mr. Kamath, let's begin right away. We'll start first with the monetary policy, which is announced last week. You know, the general impression is that the RBI has acted without acting, meaning repo rate has been left untouched. Yet this OMO twist is expected to raise the cost of capital. Now, that may not be something that is desirable for the sake of growth. What is your view on that?
Thank you, Shravan. If I go back to 2-3 years now since COVID, I think the management of the economy by the government and the central bank have been, I think, textbook for today. Not textbook as written 100 years back. So it was calibrated, and it was very bold to hold interest rates through the COVID period and thereafter, and then keep liquidity flush. This, I think, was. Can you hear me? This was probably for the first time that you saw this sort of an approach where interest rates were held low and liquidity was ample. The government provided a helping hand for the small industry, and the large industry came back on its feet very quickly. So I think that for the first time we saw something different than what was done in the past being done, and to good effect. I'll come to monetary policy. The consequential impact of the 2 years or year and a half of the war and inflation and so on. Again, I think it is the pragmatic policies of the central government and RBI which have seen us through, keeping inflation in check, not cutting liquidity too much, and interest rates, very calibrated increases. I think that again has meant that we are an outperformer in the global context. So, and it's a very interesting commentary that during this period, the West was behind the curve in increasing interest rates. Whereas for more than a century, we were lectured to that, keep pace with inflation, increase interest rates. So I give full credit for management of the economy. So I don't want to second guess them. I think they have their fingers clearly on the pulse of the economy and will do what is appropriate.
Right. Just one more issue on the monetary policy. RBI is now clearly talking about 4% inflation target, not the 2 to 6% range that we used to hear earlier. Given the reality of this growth inflation dynamics, being fixated on one particular rate, a rate which we have never reached really, except for breach rather than practice. Do you think it is a good idea?
Yeah, I think this is a target, and as every business, everybody running their life has to have a goal. And they have set a goal, and I think it's a good goal to have. And I look at it also in the context of what's today inflation in a global context. So this target that they're setting also has to have a context there, and what's happening to global interest rates. So it will be interesting to see how this plays out, and what at that point of time is either a proactive step or at times probably slightly reactive the Reserve Bank would take. So next year is going to be very interesting, and I'm sure given the track record, they will do what is right.
Okay. Moving on to a different subject. Recently I was reading a FT interview of Mr. Uday Kotak, where he talked about, something like conglomerate capitalism. We have a few conglomerates which are making the bulk of investments, but the idea should be let more flowers to bloom. Now, if you look at the data, India's 20 biggest companies are making about 80% of the total profits. Now, this is twice that what it was 10 years ago. Are we going too far on this K-shaped story?
No, I think I have a slightly different take on this. At the moment it may look to be so, I think we should welcome that. But I look at, let us say you go from the top 30 companies as in the Sensex or the Nifty 50 to 500 companies. Never in my 50 years career have I seen companies as deleveraged as they are today. And then if you look at the P&L of these companies, everybody is having healthy profits. So for each one of these companies to adjust to a 10% growth in their business is not a problem. And they don't really need to grow faster than that. If the country is growing at 6-7%, then they will probably have to grow at 10 or 12%. That much capital is there with the corporates today. Whereas in the past, you always had to borrow from a bank or an institution, and you had this set thing in mind: one, equity and two, debt. And then, including working capital debt, at times it was 4.5 debt and 1 equity. That has now come to virtually zero debt for the top 50 for sure, and the balance 450 marginal debt. And everybody now understands the power of equity, generating capital themselves and investing it. So I think this is going to be a momentum creator, and they will create wealth for the nation. And of course, the company will do well. So I think this certain conglomerates doing things, and then is just the start of the, I think not 500, another 5,000 companies will bloom. And along with that, you have got 100,000 or so digital startups. They will start blooming. So I continue to be a bull, and I continue to think that even companies at the middle of the pyramid are going to be big contributors to the economic momentum going forward.
Right. But Mr. Kamath, this private capex, a lot has been talked about it. Why isn't private capex really picking up? I just saw this CMI data where the new project announcements have actually fallen by 79% in the September. Now, where have the animal spirits gone? Is it because of loss of confidence in demand? Is it because of the geopolitics problems?
No, I think that probably there's a delay in transmission of certain things. So, for example, if I were a corporate, why would I invest if there is no demand? So I would think that I anticipate demand and I invest. And that's where I said if we are growing at 7% plus as an aspirational target, I should be happy to grow at 10 to 12%. But if I have already capacity that is installed, which is still not fully utilized, I will time that expansion. So I'm not worried about this. So there was a feeling just a year back, the private sector is not investing, but now it looks like private sector has invested. Private sector was not borrowing. That's a different thing from private sector not investing. Private sector is investing through cash accruals.
Okay. About inflation. One issue is that the data is a big problem because no one seems to be having any kind of confidence in the kind of data that we are producing. Now, Pranab Sen is on record to say that we have so many poverty schemes in the country, but we don't know how many poor we have. Now, for inflation also, how do you predict or have a proper policy prescription without knowing the inflation level?
Yeah, but I think you hit a very important structural, I would say, challenge that India has got. It is not only inflation, it is also the growth numbers. At times, growth seems to be much better than what is reflected in the numbers. Now, if I look at post-COVID, the sort of cleanup that happened in terms of the balance sheets of corporates, they generated cash, they repaid borrowings that they had, they were deleveraged, the banks' NPAs started dropping, and you have a situation today which is not that of a developing country. It is that of a developed country where, by and large, the net NPAs are below 0.5%. I mean, I could not have ever imagined that in my lifetime I would see this sort of a change. But this has happened. Pragmatic policies, helping hand from the Reserve Bank, and corporates, putting their shoulder to an effort to clean up. So I guess that sometimes this data, we'll have to look at other proxies to find out where we are heading. But I'm sure with all the huge, digital push that we are having, data also will fall in line. And I don't think it's going to be too long. In the next 2 years, we should have data which is reliable.
Many years ago, when I met you at ICICI Bank, when you were the MD, you had told me that bankers have to lead a pressure cooker existence. Because if the economy is growing at a certain rate, the banks have to grow at plus that. Recently, we heard about leading bankers talking about banks have to be paranoid about surviving. How long will Indian financial sector live with this fear of death?
Yeah, I think it is perpetual. It is not going to change. It is perpetual. The reason I'm saying is, you look at Indian banks, they came through a period where they were in small institutions. The borrowers were over-leveraged. That got cleaned up. Then came the challenges of the cleanup of the last 5-7 years. And as they probably thought that they can be now, take a breath, deep breath, you now have the technology challenge. So I don't think that paranoia is going to end. And you've got these 10,000 digital fintech companies at your heels. So you have to respond. And the changes that are happening there, at least from my perspective, in technology are so deep that if you don't respond now, it could be too late.
So are Indian banks playing the game correctly?
Honestly, no. Honestly, no. Because I think they still are driven by what was done in the past is working, maybe creaking a little bit, but working. But the rate of change is so fast that players on the sidelines, I think, are going to, in a way, be in a position to overtake and or at least build up momentum as you go along.
Mm-hmm. Okay. Is retail sector credit, that space is getting overcrowded? Because there are several NBFCs, fintechs, etc., and even some banks who have never seen a bad cycle.
Yeah, but just to endorse, just to reinforce the point that I made about what's happening on the digital front and the threat, here also the same sort of threat is coming up. But there are a lot of mitigating factors here. So you have, in terms of the technology threat, you already see the disruption that's taking place in broking. Broking now is entirely digital. So the digital entrants have taken over this field or are just about to completely take over. I would think next would come asset management, because these are easy in terms of technology. And then maybe general insurance. Life insurance, there is trust, and so may probably a little bit later. Same with banks. They have a moat which the regulator provides for the safety of the deposits. But everybody is at the border. Now come to retail banking, which is what is driving banks today. Because if corporates can survive on their own, generate cash and pump it into their businesses, except for very capital heavy things. So what do you do with your money that you are having? So you're lending it to retail. But again, if you look at it, there is a great reliance, if you take out the top 2 or 3 banks, to rely on agents or NBFCs as agents to bring you the business. And that infrastructure is going digital. So you have, now to your point about risk in terms of the credit cycle cycles always happen. But if I were to even look at it globally, I don't think ever in the past the availability of credit data was never as robust as it is now, even in our country. So you have got 2 or 3 scoring companies. All loans are reported to these scoring companies. They keep track of you. With the advanced analytics now, you can predict who is likely to default in 6 months from now. So basically the ability of institutions, again, if they are technology enabled, to track this and to take appropriate measures is far better than it was earlier. And then I'm sure as we go along, there will be other data which is non-financial, which also will drive credit scoring. Already doing it, it's already being done elsewhere in the world, but I'm sure it will get popular here. So the ability to assess credit, quality of credit is going to be much better. So yes, cycles will happen, but I think a good bank, a good lender can mitigate it with, I would say, proper analytics and this, for which the tools are available today. Technology is available, and the digital revolution helps in this.
Right. So what's your view on privatization of banks? Should industrial houses be allowed to set up a bank?
Somebody asked me this question 2 years back, and my answer was very simple. That I believe today, the fear was A, monopoly, and B, the fear could be that, will there be misuse of a banking license? You treat it like your own treasury. I think today technology has evolved to a level where that fear can be addressed. That is, every single transaction can be tracked and traced, and checks and balances can be built in to prevent that. Monopoly, I think that is, yes, that could happen. So, but flip it and you look at any development that has happened in any country, it is on the back of, say, half a dozen or so very large banks. And that has to happen in India, whether it's a combination of existing government banks, existing private sector banks, that should give you 4 or 5 banks. So, and or other private players we will need to see. But I would think that you need half a dozen very large banks to look at an economy, to serve an economy going from 3.5-3/4 trillion to 10 trillion over the, say, next 10 to 12 years. We would need that sort of base to serve this economy.
So industrial houses have the capital, so they should be allowed?
See, the capital is, I think today can be raised from the market. It's not necessary that industrial houses have, should be the preferred partners. Anybody who is demonstrating the ability to use technology and capital appropriately should be encouraged.
Right. So I know you won't get into specifics about it, but about the Jio Financial Services, the Reliance is known. Jio has shown what disruption they can do to an entire sector. Do we see a rerun of that in the financial services space?
I can't say anything because we're in a closed period with the numbers coming out very soon. So I'll seek to be excused on that.
Okay. This broader economy. You have talked about, several, RBI has been the most optimistic about 6.5%. Others have talked about 6.3, 6.2 and all that. But what we need is an 8% plus kind of growth. That is nowhere in the horizon.
It will come on the horizon. I think, even I see the IMF's numbers are 6.5. So I think that the base 6.5 is definitely, I think, achievable given the momentum that we are seeing. And the steps that the government has taken on the infrastructure side to keep that part going, the rest of it, the private players, and we will push. To me, the gap, 6.5 to 8%, will be the digital economy which will provide that. Again, if I look at benchmarks, at this stage of growth, we could expect that at the rate we are growing on the digital side, in the next 3-4 years, that should provide about a 20% cap on what we are at 6.5. So another 20% there, you are at 8%. What I mean is the incremental will be provided by the push from the digital economy. And that is going to be, to me, a game changer. We are just starting, we are at the beginning of that cycle. We will see it accelerating as we go along.
Right. But I know you have been an India bull for very long. What are the pain points do you see at this point? Maybe 2 or 3.
It's simple. I think if we have continuity of policies, I don't see any pain points internally. The pain points have to be external. And that is a little unpredictable. I think we have weathered 2 pain points, I think, brilliantly well. I think full credit goes to the government, the way they have managed that, and the central bank in the banking context, both COVID and the situation in Europe. So I think we are also learning to manage external shocks much better. But to me, that is the only thing beyond our control, as it were.
So do you think the latest, what is happening in Israel and Gaza, will it be a shock for our inflation?
You see, again, when I look at, initially I thought, if I were to read what's happening globally in terms of the economic response of the markets, as it were, I had expected them to react much more severely. But maybe NASDAQ was down for a day or so, and then it recovered, and all other markets just went on as if nothing has happened. So I think there is a message there, and maybe we should believe that it will settle on its own, and rather than worry about it.
But crude has gone up by 4%.
Yeah, but that I think we will have to live in as a part of all this, and our goal should be clearly, pump in as much green as possible. And I think we have, in a way, blessed, because we are late to the party in terms of getting into, say, the green side of it, but we are at the right time where it is cost effective to get into this. If we had done what other countries have done 10 years back, we would have been paying 4 times what we are paying today for green. So now is the time to press on the accelerator on green and proceed.
Okay. This, about, I was asking you about geo, but I'll not ask about geo, but in general, in financial sector, the tier 1 and tier 2 towns seem to be well covered and saturated. And also the democratization of money has happened, access to money has happened. Do you think that, not geo, everybody in the industry in general, is that the area to be covered, the dark zone, as they say?
See, I think a lot of things, there are a whole lot of things that will happen in finance. One is indeed taking it down to people who today might not have had access to it. And that has been something that everybody, from the government down to the central bank and the banks, try to do. But we're hampered by, say, technology not having reached down. That excuse no longer holds. There's technology there. So you can create an opportunity to lend in that domain. And that will happen, as I see. And what is called the account aggregator, I think is a game changer in this context. I would like to use, it's basically you are sharing data and to be used at your will. It is not that somebody is aggregating it for anything. So that, I think, and all your assets, if they can be mapped under that, then I think it becomes monetizable to people who are today not having access to credit. So I see a huge change happening in that push in the next 2 years. That's one. And again, with digital, what's possible is finance can be embedded into the product. So what we now term as embedded finance could happen in a big way. And that is, again, it doesn't restrict to tier 1 or tier 2. It can go down to wherever you are. As long as the credit you think is, the borrower is credit worthy.
Lastly, I think we are running out of time. Just one point about regulation. Regulation of startups in general has been talked about quite a lot. Now, since this is the best banks of all, let's stick to fintechs. These regulators or the government, they face a peculiar problem. One, you have to allow them freedom, because the freedom to innovate is something that is required. It's a DNA of any technology startup. But at the same time, you have to build up guardrails so that that freedom is not misused. How do you balance the two? The RBI is facing this problem. The government of India, Minister is here, so you can tell us more. But do you think overall the government or the RBI has been able to balance this?
Yeah, I think Reserve Bank is doing it mirably, and the government is pushing all. I think by all means possible, the ability to push this further. That is the ability of the banks and other players to lend. So I was at the Global FinTech Forum that was held recently, and I was hearing the governor speak. And the extent to which technology has been allowed to come into play in the banking universe or the FinTech universe is remarkable. Again, if we sometimes don't do it, but you were to take a benchmark of India and benchmark it with the Western world in the context of financial technologies being used in day-to-day life. I think it's a sea of difference. We are far ahead. In the payment infrastructure, for example, we are far ahead of the West. And it's the Reserve Bank which has kept the guardrails, gone into a sandbox, allowed people to get into a sandbox, work within the sandbox, prove, and then scale. So I think they have taken everything that, all steps that are possible to encourage technology to pervade into the whole transaction space. And as a result, the entire transaction business virtually is out of the banks today. So it's now basically real-time payments. So that's facilitated by the technology and the regulator allowing you to do it. Where the regulator, maybe rightly so, is cautious is when you are taking in public deposits, they need a much higher level of certainty that those deposits will be safe. And I think that's what they are now, they have created, I would say, that's the moat available to banks today. But the day there is a belief that that money could be safe in other hands too, banks come under threat. But as of today, it's a calibrated approach to allow on the technology front a whole lot of freedom, but on the deposit front, allow just a few deposit-taking institutions to work within a guardrail. And I think it is appropriate. At this stage, it is appropriate. We'll see as it goes along.
Thank you, Mr. Kamath, for being a great ambassador of the India story. Thank you very much indeed.
Thank you.
Thank you very much, gentlemen. Before you leave, requesting you to continue to be with us on stage. Gentlemen, please continue to be with us on stage. Thank you. We have a very special token of appreciation to do us the honors right now. I invite onto stage Mr. George Varghese, Group CEO, Indian Express Group, to kindly join us on stage to present a special token to Mr. Kamath. Welcome, Mr. Varghese. Good evening. Well, ladies and gentlemen, this special portrait is made by Shyam Kumar Prasad, Chief Illustrator, Financial Express. A big round of applause. I think that was beautiful. What a beautiful token to take back with you, sir. Thank you, Mr. Kamath. Thank you, Mr. Majumdar. Thank you, Mr. Varghese. Well, now, ladies and gentlemen, as we move forward, it is my honor to invite onto stage Mr. Vivek Goenka, Chairman and Managing Director, Indian Express Group, to join us on stage and address us. Ladies and gentlemen, put your hands together, Mr. Vivek Goenka.
Hon'ble Union Minister for Electronics and Information Technology, Skill Development and Entrepreneurship, Shri Rajeev Chandrasekhar, who happens to be an old friend of mine for over 30 years, and we have a lot in common. Both of us are involved in the media. Both of us have a passion for vintage cars. Both of us are well built, as our parents would say, healthy, and both of us sport a beard. Mr. K.V. Kamath, Chairman of the National Bank for Financing Infrastructure and Development. Members of the jury, the nominees and award winners, ladies and gentlemen, friends and distinguished guests, a very, very warm welcome to all of you to the FE Best Bank Awards this evening. the Express Group's annual celebration of excellence in the financial sector. Now, in its 26th year, these awards and the sheer range of achievement they acknowledge, from NBFCs to fintech, foreign banks to small finance banks, they have become, and I'm proud to say, somewhat like an annual health check on the vitals of our economy. Especially today, when state-owned banks, along with private banks, have posted phenomenal profits. With the IMF describing India as a bright spot that will contribute 15% of the global growth in 2023, we all know that much of this brightness depends on all of you here, how you steer your institutions, and on the way ahead. This brightness comes amid multiple shadows: the US-China trade standoff, the prolonged US-Ukraine war, and now the conflict in the Middle East. The old ghosts of terror and violence are back on a scale unprecedented, threatening to throw up in the air all long-held assumptions of peace and prosperity in the region. Of course, their impact on oil prices, and not to talk of humanitarian crises, all add up to a generally slowing global economy. But India's estimate to grow at 6.3% in 2023 and 24 as well, making it the fastest growing among all advanced emerging market and developing economies. And this is where a healthy banking sector, as the FE Best Bank Awards testify to, imparts tremendous confidence. Indeed, over the last 5 years, and particularly since the COVID-19 pandemic, our banks have shown spectacular resilience. Helped partly by the tightening up of the sector, by the RBI through an asset quality review mechanism, they have worked hard to clean up many a balance sheet. Writing off bad loans, generous infusion of capital by the central government, and prudent lending. All these have ensured that banks are back in shape. That is why the presence of Shri Rajeev Chandrasekhar is so appropriate. I believe needs to rush back to Delhi immediately after the function, and I sincerely thank him for agreeing to be part of the celebration today. His stellar role in the recent passage of the landmark Digital Personal Data Protection Act, the rules for which are expected shortly, matches his strong advocacy of institutional reform to ensure that technology is a tool of financial empowerment, that it addresses very effectively the changing needs and rapidly rising aspirations of customers. I'm so glad that you could make time for us today, and I'm happy to see digital and fintech making up as many as 6 of our 14 categories. A special word of our Lifetime Achievement Award winner, Mr. Chandrasekhar Ghosh, long before technology made it possible. We all know you as the nation's first banker to the unbanked. From a small non-profit in a small town in West Bengal to an MDFC MFI, and then a bank with a little over 8 million customers in 2016. And today, more than 30 million. Bandhan Bank has become a powerful success symbol of profitable lending across the rural and urban divide. As Managing Director and CEO, your vision translates to financial inclusion and empowerment of women at a scale that truly inspires. We are honored, Mr. Ghosh. Our special thanks to Mr. Kamath for his valuable insight into the economy and the financial sector at the fireside chat we just had. Mr. Kamath steered the ICICI Bank during a critical period during the global financial crisis in 2008, along with ICICI Bank, Two others, HDFC Bank and Kotak Bank, have not just expanded banking, but also delivered spectacular value to investors. I must add something which might embarrass Mr. Kamath, but just after the massive raids by the Rajiv Gandhi government post our exposure to Bofors, exposure of Bofors, Mr. Kamath bailed the Express out with some substantial loans. Thank you, Mr. Kamath. We are here and flying strong today, not without your contribution. Today's award winners have been selected through a process that blends the most intense qualitative and quantitative analysis of data from the RBI, crunched by our knowledge partner Ernst & Young, and then deliberated upon by a file jury led by none other than former TCS Chairman Mr. S. Ramadurai. I thank you, Mr. Ramadurai, for sparing your valuable time, and I also thank the other members of the jury, Mr. Shankar Raman, Director Larsen & Toubro, Mr. Amit Chandra, Chairman Bain Capital, Mr. Biswamohan Mahapatra, former ED Reserve Bank of India and non-executive chairman of NPCI, and Mr. Sharad Sharma, founder of Esprit Foundation. We are very, very grateful to them for their time and the incredible rigor and credibility and the insight they brought to the selection process. The banks and leaders they have chosen, the nominees and winners this evening, will surely be the change makers of tomorrow as they step forward to tap the robust credit demand in the economy, both from companies and individuals, and help script the India story. Once again, my congratulations to all the award winners and the institutions they head. Thank you, and I'm sure I will see many of you back here next year. Thank you, ladies and gentlemen.
Thank you so much, Mr. Goenka, for sharing with us the exciting highlights of what we can look forward to this evening. Well, ladies and gentlemen, as we move forward this evening, we shall proceed with an exclusive conversation with our chief guest, followed by the much-awaited awards. So now, I would like to invite onto stage our chief guest, ladies and gentlemen, the Hon'ble Union Minister of State for Electronics and Information Technology, Skill Development and Entrepreneurship, Shri Rajeev Chandrasekhar, for an exclusive conversation with Mr. Rishi Raj, Executive Editor, Corporate Financial Express. A warm welcome, ladies and gentlemen. A huge round of applause, please.
Thank you, everybody. It's always a pleasure having a conversation with Rajeev Chandrasekhar ji, a very articulate union minister who's basically known for his candid views, which if anybody goes through his timeline on X, which formerly Twitter, will get to know. Even on this day, we are really thankful for him to have come and raise this occasion, because he has held some 2 or 3 hectic meetings in Delhi today, and basically on the subjects which very much concern us. So I would just like to begin with saying that right now you have just the Digital Personal Protection Act has been passed, and you are working on another bill, Digital India Bill. So how do both these bills address the challenges of which the banking sector, the financial sector is likely to face?
So first of all, thank you for having me this evening. And I was a little perplexed on what I was doing in a banking conference, because my only dealings with banks are when I pay my credit card bills nowadays. So I was a bit curious, but I'm glad that Mr. Kamath set it up by talking about digital and the power of digital in the broader financial sector. And certainly I believe so. Therefore, I have a locus to come here and speak. Look, I think, and Mr. Kamath said this, and Shamal also mentioned this, that the digitization process, or the acceleration of digitalization of our economy, is now at an unprecedented pace. The legal framework, however, that in a sense regulates this and governs this whole space is about 22 years old. It's the IT Act from 2000. And for many of you in this room who don't know, and some of you may know, that entire act does not even mention the word internet. So that is where we are in terms of the legislation. It is certainly 22 years old. It is vintage in a sector that is very contemporary. It is fast growing. It's accelerating, innovating, and disrupting every day. And so we have designed a framework that essentially encompasses and consists of the Digital Personal Data Protection Bill to deal with privacy and data protection, and the Digital India Act, which will be a superseding act of the IT Act. And that will address the internet today as we know it, the various types of intermediaries, the complexity, the diversity, the guardrails that Shyamal mentioned that are required for emerging technologies, the regulation of user harm and criminality on the internet that is on the rise. So therefore, we will have these two legislations that deal with essentially the broader digital economy, with the DPDP playing the role of protecting the personal privacy and data protection.
This brings actually the issue with DPDP, which you highlighted, which you always explain when you talk about it, about purpose limitation, storage limitation, usage limitation. Don't you think that this will, in a way, it strikes at the business model in some way of banking, financial sector and all, because it's the data which is the king, data which is used to basically tap into other businesses, to market certain products. So,
I don't believe so, because number one, the entire act was designed with extensive public consultation, which is the way we build our legislation. The banking sector, the financial sector, the regulators, representatives, and indeed the broader ecosystem of startups and innovators were all involved in the design of this legislation. And to your specific question, I will answer it this way. If there is anybody in the fintech sector or in the broader consumer internet space that has built a business model that relies on exploiting personal data of a consumer without his or her consent, then that business model has to be shut and will be shut as a consequence of the DPDP Act. However, if there is a much more responsible, the law-led approach to dealing with personal data, which is with consent of the data principal, which is the consumer or the small business that is dealing with the platform, there should be no problem. So there is certainly, by design, by goal, by objective, the outcome of the bill is to put the brake on and create a deep behavioral change amongst all the intermediaries that deal with the personal data of Indian citizens, and compels them or incentivizes them or motivates them to do so in a responsible manner and in compliance with the do's and don'ts that have been laid down in the DPDP.
Mr. Chandrasekhar, you actually, just digressing from the Data Protection Act, you were an entrepreneur. In fact, if I remember correctly, this is the city where BPL Mobile was the first telecom company which basically started services when private sector was allowed into the sector, and in Mumbai, and you led the company. So you started as an entrepreneur. So you were dealing with banks, I think, in a way that time. You have shifted to the other side. Now you are a policy maker, basically. How do you see the shift? How do you see the transition from your entrepreneur days to this side, and what kind of changes have come into the sector?
I think it is, earth and the moon type of transformation. I think when we started out as entrepreneurs, and this is a question I'm asked when I travel around the country and meet students and in colleges, about what is the difference. The system at that time was, in a sense, against entrepreneurship. It was, in a sense, biased towards the larger groups and larger conglomerates, and there was really very little space or very little encouragement in the system for newbies. In contrast, you see today that the entire government and the entire ecosystem today is almost a cheerleader and is invested deeply in the success of new startups and new ideas. And I certainly remember the early days of having to sit outside the room of a chairman of a development financial institution with an application for a 50 crore loan, and then walking away and coming back and walking away and coming back. I think those days are long gone. Today, the financial sector is a stakeholder in the economy, in economic growth, and the financial sector is a stakeholder in the success of these new entrepreneurs and new startups. And so therefore, that was a before Narendra Modi age, and we are living in the post-2014, a very, very transformed, a very, very agile, much more agile. I don't say very, very agile to the point that Mr. Kamath made. I don't think we are there yet in terms of a globally competitive financial sector, but we have certainly traveled a big, long distance from where we were just 9-10 years ago.
You were also, if I remember, in your MP days, before you became a minister, you were among the first ones to, speak against the rising NPAs, which were because of which the banks were affected. So how do you see the scenario today?
Look, and this is something that I have crossed swords with the then governor of RBI, Raghuram Rajan, who suddenly has discovered penchant for politics recently and is commenting on everything on the planet. Look, I think the 2008 to 2012 period, 2013 period, was certainly the worst in the history of Indian banking. And I'm not saying that there were, great times before that, but certainly the way the banking system was wrecked by a combination of phone a loan and bribe a loan, those two little phenomenon that brought the entire financial sector to its knees by 2014. And some people can say, look, there is a good thing that came out of it, that the dominance of public sector lending that characterized the Indian credit market or the credit sector shifted sharply into more and more private sector delivering credits. And then when the private sector banks were focusing only on blue chip and AAA credit, NBFCs rose and they bridged. And the original share of public sector credit versus private sector credit of almost 90-10 or 80-20 shifted and became almost 60-40 by 2019. So maybe there is a logic in that you have to create some destruction before there is reform. And I don't subscribe to that, but maybe that is what came out of that period of 5-6 years, where certainly I think the regulator was asleep at the wheel, the banks did everything that was not to be done, and we created concentration of risk of the kind that we have never seen before. In 2010, I raised in Parliament how almost 90+% of the banking system's net worth had been lent to only 9 groups in the country. And so that type of concentration of risk in that famous Credit Suisse report called House of Cards demonstrated how, in a sense, somebody went to sleep at the wheel of either the regulator or in the management of the banks. And when we talked at that time about banking reforms, if you remember, we always talked about new licenses or inviting foreign banks. Nobody talked about the real issues about governance of banks. Nobody talked about real issues of risk management at banks. And a lot of those things have now happened post-2014. And you can see the difference now. We have a much stronger financial sector today, and I want to share with the audience one of the highlights, at least in my career, as somebody who's understood and observed the Indian banking system, was when the Silicon Valley Bank collapsed. I had a video conference with about 300 Indian startups who were banking with the Silicon Valley Bank or other American banks because they thought that was the best thing to do. And all of them wanted to know how they could bail out of the US banking system and come to the Indian banking system. And I think the fact that the Indian banking system at a time of such volatility and crisis was seen as a safe harbor speaks a lot to where the Indian banking system is today versus where it was in the past.
You talked about regulations, so that brings me to a question. If we look at this Digital Data Protection Act, basically you relaxed the earlier draft on which the government reworked and said that, internet is not, doesn't have boundaries. So that's why the earlier one said that you have to, data has to be stored, personal data has to be stored within the country. Now it's allowed to be stored anywhere, whichever the countries which are not in the negative list. But will this override any sectoral rules? For instance, as far as I understand, like RBI has certain rules that, the financial sector data has to be stored in the country itself. So will this particular law override other rules which were earlier found by any sectoral regulator, including the financial sector regulator, or will sectoral regulators have the flexibility to devise rules which basically are a little different from what the data protection law lays down?
So the data localization, which is what this is referred to as, data localization refers to a policy that mandates that personal data be stored and processed only in your own jurisdiction. While that was certainly one of the asks or one of the inputs that came up strongly during our consultation, we took a view that given the ubiquitous nature of the internet, the boundaryless, geographyless nature of the internet and cyberspace, to try and create these artificial restrictions on cross-border data flow would be creating just complexity. So instead what we did is we created a formulation that said, as long as the obligations under the Digital Personal Data Protection Bill, or the Act, are enforceable in a geography, or enforceable by a platform that is storing and processing data on the cloud, let us say in the US or UK or France, as long as they respect the rights and agree and consent to the enforceability of the law, we will not prevent that. However, if we find that there is any case that a particular jurisdiction has either diluted the rights of the Indian citizen or the Indian business that is whose data is being processed there, we have the power to blacklist that geography. So instead of whitelisting it, we have gone into, by default, allowing all geographies with the right to progressively create unsafe geographies for data protection. So that is point number one. To your larger question of whether, for example, an RBI or a health regulator can turn around and say, no, but this personal data in our domain is more sensitive, and we can prescribe stronger, harder rules for the storage and processing of the data, the law actually provides for that. And in that sense, the RBI can stipulate something that is far more stronger, stricter in terms of where the data can be processed, mirroring of data if the data is being processed abroad, and same with the health regulator. So the bill provides for sectoral regulators to have the necessary wiggle room to manage their domain and their sector based on their approach and their perception of what is right for their sector.
That means basically the Act has basically taken into care that, it doesn't work in, these kind of regulations don't work in silos like it has.
No legislation that we do in the digital space will ever be silo based. It is not a Meity legislation. It is a Government of India legislation for the digital space. And therefore, every participant in every ministry, which is now increasingly all ministries are basically participants in the digital workplace or the digital economy, they will all have their ability as domain sectoral regulators to carve out their own set of rules and regulations.
So I asked this because today I understand you chaired a meeting with Department of Financial Services as well as RBI representatives on these fake lending apps, which the government has been trying to basically remove, but still there are a lot of which are available on the app stores, etc. So what is exactly the position on it, and what is the which way do you think we need to go forward so that this particular...
So that is a classic case. There are two very classic cases where both the digital ministry and the finance regulator, the banking regulator, have to work together to create a solution. Because if either one of them do it on their own, it will be half the solution. This is not to do with fake loan apps as much as it is about loan apps that are predatory, are violating the laws, uh, crossing the threshold of criminal conduct. And so therefore, because these app stores on Google and Apple and any other app store onboard not based on legal compliance, but they onboard based on technical and security compliance only. It is an interesting and unique challenge on how do you regulate what kind of apps are there on the Google Play Store that may end up doing something absolutely criminal or illegal in the finance space, and who should regulate it. So we have talked about it today. We think we have an interesting all of government type approach to it that will certainly prevent unregulated entities and entities that have not gone through some levels of due diligence prevent them from entering and gatewaying into the Indian banking system. So just like a consumer today has to go through a eKYC or a KYC to enter the Indian banking system, we have proposed that there should be a due diligence mechanism before either an online gaming or betting company is onboarded into the banking system or a loan app is onboarded into the banking system. The original thinking was that we will do a whitelisting approach, but given the propensity of these apps to come onto these Play Stores at a rate of 100 per day and 200 per day sometimes, we have moved away from the whitelisting approach to creating a much more diligence-based approach to onboarding into the banking system. So if you have an app, and that is an app that is, let's say, determined to do some predatory type of behavior, that should be caught at the due diligence at the eKYC or the KYC level before they are allowed to open a bank account, and some sort of tracking of their bank transactions to, in a sense, regulate them. So these are the ideas we've suggested with RBI and the DFS, and we're working on some interesting models on how to ensure that the safety and trust of the internet, which is really our duty to the digital nagariks, is never compromised.
So you mean to say that any app, any startup, any fintech or anything which has to deal with the financial aspect in terms of either lending or transferring of money or any of this thing, there has to be some due diligence how they get into the system.
Which is a normal thing. Every consumer goes through a due diligence. I think this category, for example, I would say if it is a loan app that is an extension of a bank, or a loan app or a digital platform that's an extension of NBFC, they are anyway regulated by the RBI. But if it is a standalone app that is trying to deliver private credit and the sources are not known, they are an unregulated entity, they are not regulated by the RBI, if they have to onboard into the banking system, they should certainly go through a deeper, much more granular due diligence than currently that they are going through.
But the question arises, like, which will be the agency, the body?
It'll have to be the banking regulator that will have to specify to the banks that the banks have to do the due diligence. The banks do the due diligence on consumers, so the banks will have to do a due diligence on the customers that they onboard.
So this is the way forward to basically...
Yes. We think this is the formulation.
So will this be addressed in the Digital India Bill, or will it be...
No, look, we tend to not want to trespass into another regulator's territory, and we have made it very clear to the RBI that while we can do this in the IT Act, we can do this in the IT rules, we would rather have the banking regulator regulate the banks than have the IT Act regulate the banks or banks that are having a digital footprint.
It's very interesting. Actually, I wanted to have your views on this because you talked about your entrepreneurial journey where you have to, where at that time taking loans, etc. were difficult, and how times have changed. In your Digital Data Protection Act, you have made some concessions for the startups, that they will not be bound by these strict regulations which have been put in place. At the time we are developing a model or a business, will that period be unlimited, or will there be some kind of a...
No, a startup will not remain a startup forever. I mean, that's not the expectation. What we have said is, and this is really the Prime Minister's way of looking at things and his philosophy, that any legislation that we do, any set of rules or guidelines we do in the digital space must balance, on one hand, the rights of the citizen that we are trying to ensure through the law, but also not create any road bumps or slow down the pace at which we are growing the digital economy. Mr. Kamath talked about the digital economy, and I just want to add a few points to that. The digital economy today is growing at about 2.5 times the actual non-digital economy. We were at 4.5% of total GDP as digital economy in 2014. We are at about 10 to 11% today. By 25-26, our Prime Minister's target is to reach 20% of GDP. And to the question that Shamal asked, where is the growth going to come from? Mr. Kamath's answer was absolutely on point on that. The growth is going to come from the digital component of the GDP. And that is today galloping. So we don't want to do anything to even have 1% of slowdown on that pace of growth. And we think that is going to create all the headroom for our GDP. It is going to create all kinds of other adjacent effects on the other parts of the economy that are going to be very positive. So the DPDP, by design, protects the citizens and those whose rights have to be protected. But at the same time, the formulation of the act is a very sharp departure from the GDPR in that it is non-prescriptive, it is extremely principle-led, and tries very hard to continue to have the accelerated pace of digital economy growth continue. So therefore, for startups, we have said there is an embargo for a period, and that embargo could be between 6 months to a year, or to a certain critical mass in terms of the size of the startup. So that will be left into the rules.
Do you see any kind of a misuse which happens during this period?
Misuse, I think to try and legislate to address 100% no misuse, there'll always be some smart guy who will game this. But we have designed the law to have the ability to continuously react to challenges by making sure there's a lot of subordinate legislation. So assuming somebody comes up 2 years later and is smart enough and has used AI to somehow game it and has created a series of startups and has distributed his business amongst 100 small startups, we'll pick that up and we will create some amendment to the rules at that time.
But digitalization, of course, has been growing at a great speed, and it will grow, as we have said, as Mr. Kamath pointed out. But what is the biggest impediment do you see in that growth? Meaning, I would see still, I'm just sharing my...
So I'm glad you asked that question, because when Shamal asked Mr. Kamath that, I wanted to get off the chair and answer that question. And I actually think there is a real opportunity for us in the next 2 to 4 years. And it's the biggest opportunity that we've ever had in the history of independent India. The electronic supply chains are shifting dramatically. We are today growing electronics manufacturing at a rate that nobody would have thought possible in 2014. Smartphones, IT hardware, servers, wearables, hearables, almost the entire broad category of electronics today, India is seeing investment every day. Large global scale factories are being built and manufacturing and exports. We have a window of 2.5 years where the China plus one strategy, which has started, will complete and conclude. And in that 2.5 year period, if we can grab as much of those investments as possible, and there is competition, there is Vietnam, there is Philippines, there is Mexico. Our goal today, our Prime Minister's goal, our government's goal is that in the next 2.5 years, we significantly want to up our electronics manufacturing, our semiconductor design and innovation, our AI capability, because these are all going to be determining what the size and scale and competitiveness of the digital economy is going to be for the next decade. So I think the next 2.5 to 3 years is absolutely important. And to take a point from which Mr. Kamath said, he was being polite, and I can be a lot more forthright on this. If the same momentum, the same leadership of Prime Minister Narendra Modi ji for another 5 years, same tempo, same growth, on the other side of 2029, this will be a very, very different economy. This will be a very, very much more diversified economy where digital economy and electronics manufacturing will be a much bigger part of the overall GDP with jobs, investments, and innovation. So I think it is certainly clear to me that we have this window, unprecedented window, once in a lifetime window, and if we as a nation collectively grab it, government, private sector, startups, entrepreneurs, academia, all of us grab it, there's nothing that can stop us.
One can continue and carry on a conversation with you for as long as one wants, because you never stop. Your ideas will. But I think you have summarized it well. So I would thank you very much.
Thank you,
for
Rishi.
sharing
Thank you
your
so much.
views on
Thank you all. Thank you.
Thank you so much, gentlemen. That was truly an exclusive conversation and so many relevant takeaways. Appreciated. Well, now, ladies and gentlemen, let's proceed towards the prestigious FE India's Best Bank Awards for the year 2021-2022. The winners are selected on the basis of the analysis done by Ernst & Young and deliberations by our distinguished jury members who are industry experts and leaders of the financial industry and policy making. Ladies and gentlemen, I think it's just right that we take a look at the jury AV.
Amit Chandra, Chairman, Bain Capital. B. Mahapatra, Non-Executive Chairman, National Payments Corporation of India. R. Shankar Raman, Director and Group CFO, Larsen & Toubro Limited. S. Ramadurai, former Vice Chairman, Tata Consultancy Services. Sharad Sharma, Founder, iSpirit Foundation.
Ladies and gentlemen, our jury members, I think it's time for an applause for them, right? And as we step forward, may I please invite our chief guest, the Hon'ble Union Minister, Shri Rajeev Chandrasekhar, and Mr. Vivek Goenka, Chairman and Managing Director, Indian Express Group, to kindly join us on stage to present the FE India's Best Banks Awards. Welcome, gentlemen. Well, I would now like to invite the presenter who's going to join our dignitaries on stage for the first set of awards. So, ladies and gentlemen, please join me in welcoming onto stage Mr. Viren Mehta, partner, member firm of Ernst & Young Global, our knowledge partner, to join us on stage for the first set of awards. Sir, please join us center stage. A loud round of applause, ladies and gentlemen. Let's be generous this evening. FE India's Best Banks Awards, the first category, FinTech Lending. Let's take a look at the winner.
FinTech Lending. The winner is Lentra.ai.
Congratulations to Mr. Rangarajan Vasudevan, co-founder and chief data officer, Lentra AI, to kindly join us on stage. Congratulations, Mr. Vasudevan. Moving on. Congratulations, Mr. Vasudevan. And the next category, FinTech Regulatory Tech. The winner is
FinTech Regulatory Technology. The winner is Fintelix.
Congratulations, Mr. Shailendra Mrutunjayappa, President and CEO, Fintelix. Congratulations, Mr. Mrutunjayappa. Thank you so much. Mr. Mehta, thank you for joining us on stage. And now we invite onto stage Mr. Vijay Adav, Director, Ward Wizard Innovations and Mobility, to kindly do us the honors. Next, joining us on stage for the next set of awards, Mr. Vijay Adav. Moving on, the next category, FinTech Payments, and the winner is
FinTech Payments. The winner is PhonePe.
Inviting Ms. Niharika Sehgal, Head P2P Payments, Recharge and Bill Payments, PhonePe, to join us on stage. Congratulations. Congratulations, Ms. Sehgal. Moving on, we move on to the category FinTech Investment, and the winner is
FinTech Investment. The winner is Zerodha.
Congratulations to Mr. Abhishek Singhania, Senior Manager, Zerodha, joining us on stage. Congratulations, Mr. Singhania. We now request Mr. Viraj Vithal Shetty, Marketing Head, West Radico, to join us on stage to present the next set of awards. Welcome, sir. And the next category is FinTech Insurance. The winner is
FinTech Insurance. The winner is ACO General Insurance Limited.
May I request Mr. Manish Thakur, Chief Investment Officer, ACO General Insurance Limited, to join us on stage to receive the award. Congratulations, Mr. Thakur, and the category we step forward to is Savings Product. The winner is
Savings Product. The winner is Bank of Baroda.
Welcome on stage Mr. Devdutt Chand, CEO, Bank of Baroda, to receive the prestigious award. Congratulations, Mr. Chand. And we'd like to thank Mr. Shetty. Thank you for joining us on stage. And now for the next set of awards, we welcome Mr. V. Srinivasan, Executive Chairman, eMudra, our co-presenting partner, to do us the honors. Welcome, sir. Good evening. The next category, Small Finance Bank. The winner is
Small Finance Bank. The winner is AU Small Finance Bank.
Mr. Vivek Tripathi, Head Commercial Banking, AU Small Finance Bank, kindly do us the honors and join us on stage to receive your award. Congratulations, Mr. Tripathi. The next award is the category Digital Bank, and the winner is
Digital Bank. The winner is IDFC First Bank.
Mr. V. Vaidyanathan, Director and CEO, IDFC First Bank. Congratulations. Congratulations, gentlemen. The next award is in the category of a non-banking financial company. May I now request for the winner, AV?
Non-banking financial company. The winner is Bajaj Finance.
Mr. Nitish Asthana, President Payments, Bajaj Finance. Congratulations. Congratulations, Mr. Asthana. Thank you, Mr. Srinivasan. Thank you very much, Mr. Srinivasan, for coming up on stage. I now request Mr. Virendra Maiskar, Managing Director, IRB Infrastructure Developers, our presenting partner, to do us the honors for the next set of awards. Up next, the category is Foreign Bank. The winner is
Foreign Bank. The winner is Citibank India.
Congratulations, Mr. Ashu Kullar, Chief Executive Officer, Citibank India, walking onto stage. Congratulations, sir. Congratulations, Mr. Kullar. And the award category up next is Private Sector Bank. The winner is
Private Sector Bank. The winner is HDFC Bank.
Congratulations, Mr. Kaizad Barucha, Deputy Managing Director, HDFC Bank. Ladies and gentlemen, much louder, please. Congratulations, Mr. Barucha. And right here, moving forward to the next category, which is Public Sector Bank. The winner is
Public Sector Bank. The winner is Bank of Maharashtra.
Ladies and gentlemen, put your hands together for Mr. A.S. Rajeev, Managing Director and CEO, Bank of Maharashtra. Welcome, sir. Ladies and gentlemen, a loud round of applause. Congratulations, Mr. Rajeev. And the next category, as we step forward, is Special Jury Award. The winner, AV, please.
The Jury Special Award. The winner is National Payments Corporation of India.
Ladies and gentlemen, Mr. Vishwanath Krishnamurthy, Chief Risk Officer, National Payments Corporation of India, walks onto stage to receive the award. Congratulations. Congratulations, gentlemen. And now, ladies and gentlemen, we are stepping into the individual awards segment. May I now invite onto stage Mr. Anand Goenka, Executive Director, the Indian Express Group, to join us. Welcome, sir. Requesting Mr. Maiskar to continue to be with us on stage. And now, ladies and gentlemen, please put your hands together for the award category. We move forward to Banker of the Year Award for the year 2021-22. It's time for a short and exclusive film on the journey of our winner.
Banker of the Year, Deepak Gupta. Despite it being a difficult time, with the pandemic still raging, Kotak Mahindra Bank negotiated 2021-22 better than most others. The private sector lender managed to grow its balance sheet by about 12% and profits by 23% without compromising on asset quality. A strong liability franchise, a big liquidity buffer and competitive pricing helped it not just catch up but also outpace peers in many areas. At the same time, Managing Director Deepak Gupta was working to channel investments into technology, reinforce the core applications and beef up information security. Several new features were added to the bank's app during the year, making it one of the top-rated banking apps on both iOS and Android. The results? The bank added more than 6 million customers during the year. For these achievements and more, the FE Best Banks jury judged Gupta as Banker of the Year.
Ladies and gentlemen, huge round of applause, Mr. Deepak Gupta, Managing Director and CEO, Kotak Mahindra Bank. Invitingly, Mr. Gupta. Congratulations, ladies and gentlemen. Please put your hands together, Mr. Deepak Gupta. And it's time now for the most awaited award of the evening, the Lifetime Achievement Award, which felicitates the individual whose contributions over his career to the banking and the financial sector has led to fundamental changes and reforms. Let's take a look at his inspirational journey.
Lifetime Achievement Award, C.S. Ghosh. From a little over 8 million customers in March 2016 to more than 30 million customers today, Bandhan Bank has come a long way. The country's first banker to the unbanked had its beginnings in a modest not-for-profit enterprise in Konnagar, West Bengal. In 2006, it metamorphosed into an NBFC MFI and thereafter, in August 2015, started operations as a full-fledged bank. This was the first ever instance of a microfinance institution becoming a universal bank. To Chandrasekhar Ghosh goes the credit of setting up an organization and nurturing it to a point where the total business today is 2 trillion rupees. Through this journey, the lender has remained committed to its mission of furthering financial inclusion and empowering women. Even as it pursued organic growth, the lender acquired a stake in Growth Finance, among the country's foremost affordable housing finance companies. Ghosh has led the bank from the front, diversifying the loan portfolio and digitizing the operations. For having created a profitable lending institution with a presence across rural and urban India, Chandrasekhar Ghosh is the winner of the FE Best Banks Lifetime Achievement Award.
Ladies and gentlemen, a standing ovation as we welcome on the stage Mr. C.S. Ghosh, Managing Director and CEO, Bandhan Bank, the recipient of the Lifetime Achievement Award right here at FE India's Best Bank Awards. And we request you, sir, to kindly share a few words with us, Mr. C.S. Ghosh. But we have a special memento for the Honorable Minister. Ladies and gentlemen, please put your hands together for our chief guest today. Thank you so much, sir, for your guidance, your patience, and we have a special memento, which is a beautiful portrait that will be sent across to you. In the meantime, the Lifetime Achievement Award recipient. Ladies and gentlemen, put your hands together for Mr. C.S. Ghosh. Kindly take your seat as we request you to share a few words with us, sir.
It's my honor to receive this award from very dignitaries, ministers, and the chief of our Financial Express. I'll thank you, the jury. I thank you to the Financial Express to give this award to the 30 million customers. What they achieved, I just has been carried on behalf of them. And I also received this award, the success of 72,000 of my employees who are given a very hard work for the people on that. Very differently, I'll be like to mention one point. Out of 30 million customers, 20 million customers are women. We are trying to give the life change of the women, and it has been done. And they are created huge employment for their enterprise. So I'll be proud of these women, and all of you pray for us. We'll be like to reach more people, more women, and our country will be changed. And we'll be like to build up lot of entrepreneurs who can be create the new employment and the change of the life of the bottom of the pyramid. Namaskar. Thank you.
Ladies and gentlemen, that was truly inspirational and a beautiful invitation. Please put your hands together for the recipient of the Lifetime Achievement Award, Mr. C.S. Ghosh. And of course, ladies and gentlemen, we're going to move forward to a beautiful group photograph, but not before the closing remarks this evening. I now invite onto stage to do us the honors, Mr. Mahaiskar, the Managing Director of IRB, to kindly do us the honors. Sir, if you could kindly join us on stage. Ladies and gentlemen, please welcome Mr. Mahaiskar, our presenting partner.
Good evening to all of you, and it's indeed a matter of honor to be here and say hi to all of you. It is the 5th year of association with Indian Express, and it has been a great journey to be a part of this growth. IRB infrastructure has been in the forefront developing the infrastructure for the country, and today has the largest toll road network portfolio. And in this journey, banks have been a solid pillar of strength, with the help of which we have been able to grow. And I would like to thank Vivek ji and Anand for giving me the opportunity to be here and associate with this event. I would like to thank all of you for that, and have a great evening ahead. Thank you.
Ladies and gentlemen, we'd like to thank Mr. Mahaiskar for the closing remarks this evening. And I request all of you to please stay on and join us on stage for the group photo. May I invite our winners, our jury members, our partners. Ladies and gentlemen, we request Mr. Vivek Goenka to kindly join us on stage, Mr. Anand Goenka to kindly join us, Mr. George Varghese, Mr. Shamal Majumdar. Our winners, jury members and partners, kindly join us on stage. May we please invite Mr. K.V. Kamath to kindly join us center stage. Let's have some music as our dignitaries and our winners join us on stage. Ladies and gentlemen, it would be wonderful if you carry your trophies onto stage. The winners, if you can carry your winning trophies onto stage. Thank you. Congratulations. Congratulations, ladies and gentlemen. Our winners joining us on stage, a group photograph with all our dignitaries. Ladies and gentlemen, requesting all our partners to be with us on stage. And now the group photograph. If you would join us in one final resounding applause, please, everybody in the audience. Big congratulations to all the winners of FE India's Best Bank Awards. We thank our Chief Guest, the Hon'ble Union Minister of State for Electronics and Information Technology, Skill Development and Entrepreneurship, Shri Rajeev Chandrasekhar. We really appreciate his time, and our deepest gratitude and thanks to our host, Mr. Vivek Goenka, and all our dignitaries, especially Mr. K.V. Kamath. Thank you so much for your presence here. We'd like to thank all our partners, our presenting partner, IRB Infrastructure Developers, co-presenting partner, eMudra and Gujarat Mineral Development Corporation, corporate partner, Radico, associate partner, Hon'ble Developers and Ward Wizard Innovations and Mobility, knowledge partner, Ernst & Young Global. Ladies and gentlemen, as we look around this evening, we can see that the vibrancy and the excitement that you brought to this evening as an amazing audience truly calls for more celebration. Please join us for cocktails and dinner. My name is Keisha Lobo, and it's been a pleasure being your anchor. Ladies and gentlemen, cocktails and dinner to celebrate the winners of FE India's Best Bank Award. Thank you so much for joining us this evening. Congratulations to our winners.